Welcome back to the Crypto Picture channel, where I help you see crypto through a clear lens. Today, we're going to be pretty much only focusing on the price of Bitcoin from a big picture perspective, from a macro perspective. I see a lot of people saying bear market, bull market, so on and so forth. Realistically, I know there is a lot of new people, and a lot of new people didn't get in until we were, higher than 40, 50K, 60K, possibly even. And a lot of those people are at break even at the moment, or even down, right? And I feel for those people and I get it. But we're going to go over some macro picture stuff here, okay? Based on what we've seen and what the indicators are saying, everything is very 50-50 here. If this is a market top, it's a lot shorter than what we would have originally anticipated, based on the theory that, with more money coming in and with more adoption, you would think that these cycles would get longer and not shorter. So if we were to say that this is the market top that we had back at 65K, but let's just call it 60,000, this would assume that we've seen a decrease from all-time low in the bear market to all-time high in the bull market, compared to 2016 going into 2018. So we saw that low back here, January 2015, and then the high being put in on December 2017 on the price of Bitcoin, which was about 1,064 days. Now here we've seen about 900 days. So this would put us, give or take a handful of days, let's just call it 200 days less of bullish price action or accumulation based on the bottom ranges here. It's possible, and I don't want to say it's not possible, that this is a market top. I'm still under the impression that we are closer to a 2013 type market cycle, where we broke this parabolic uptrend line here, just like we did here, and then we saw a really fast, strong correction to the downside. Back here, more volatility due to a smaller market cap, less money to move the market. We saw about a 70-80% drop here. And then as of current day, we saw roughly about a 50%, give or take a few percent drop. What I really want to focus on here, because I've had a lot of questions in the Discord group, and if you're not part of the Discord, the link is down below. Please go and join. It's entirely free. I do have a Patreon link as well that would give you access to the premium group, but the Discord is free. Now, what I was saying, I got a lot of questions in the Discord about, if this is bear market, should I sell everything, and so on and so forth. Well, if you didn't take any profits at 60K, you're kind of, in this zone now where you don't really want to sell, because based on all of Bitcoin's market history, from top of bull market to the bottom of the bear market is about an 80% sell-off, okay? And right now, we saw about a 50%. So I'm not saying that you can't see another 50% correction from here. Mind you, this is the BLX, so this is showing yesterday's price. But I'm not saying that you can't see an additional 50% from here. We could go as low as $12,000 to $20,000, that's for sure. But if you have conviction in this space, I wouldn't be selling here. I wouldn't be selling my Bitcoin here. I mean, we've already gone down 50%. If we were to go down 80% from all-time high, and let's just call it, at the worst case, we've seen Bitcoin go down by 84%. That would put us around 10 grand. But most scenarios would put us at around 80% drop from the absolute peak, which would put us about $12,000, $13,000 range. Now, if we were to see something similar to 2013 and we do drop by 70%, which is possible, I mean, due to larger market caps, I think it is expected that we would see less volatility. So a 50% drop would fall under that category in my opinion. But if we were to see that 70% drop, it would put us right at the previous all-time high. Most people that don't have TA experience and all this type of stuff, and even if you do, dollar cost averaging into Bitcoin has proven to be probably the most lucrative way of trading or buying Bitcoin. Now, does that mean while we're waterfalling down, you need to dollar cost average in? Well, that all depends on your plan. And if you're planning to buy like once a month, once a week, right now, I would say maybe buying once a month is a little bit on the safer side if you are trying to be a little bit conservative. But for me personally, as long as you have a decent amount of cash available or gold, whatever it may be. Let's say right now you have a total of 10 grand that you're willing to allocate towards crypto. You don't want it all in the market right now, right? You should have 30 to 50% freed up. Now, if your conviction is very high, maybe you only want 30% or 20% on the table. I'm just saying for the majority of people that have not yet built their complete conviction, having 30 to 50% or more, if you're more conservative, you don't need to catch the bottom. If you start seeing a weekly uptrend here, you can also start to ladder in then. But don't buy the pumps, buy the pullbacks. So if we go and create, for example, if we're looking at the weekly, we've seen nothing but pretty much a drawdown here. And I'm going to switch to the other candles. So we've seen pretty much a drawdown here. So if we were to start pumping here, don't buy this. Buy when it comes back down and then you get a continuation. Now, obviously, you run the risk that it could just keep going down. It's still better than just buying the pump, right? Like either way you look at it, your risk to reward is going to be better buying the dip, because if you're just buying the pump and you buy the top of this pump and then it corrects down, now you're kind of put in a position where is it going to be a lower high? And then if it continues lower, you actually took on more risk. Now, another way you could look at this is, so we see the top of this weekly candle here was at about 41,000 or so. So you could theoretically wait for a break of this level to confirm and then start to average in. But either way you look at it here, and this is what I've been saying for quite some time, even if we are to continue down, I still think we go up before we come down. So this could be a huge bull trap, right? So you have to remember, the higher you buy, the more risk you take. And I did a little bit of a tally here for my Discord, and this is in the free Discord here. This is kind of my thoughts on accumulating at these levels and the different risk to rewards compared when a lot of people were buying BTC at 60K. If we were to say the market top is at 90K, and remember, this is with the bullish bias being in place, and there is a ton of metrics to show that this could be the level. I'm staying away from the Moon Boy 200K by December 2021. BTC at 60K. When you bought BTC at 60K, you had a potential 50% return. Let's just call it, I just did it to get to the closest level, just averaging out. I'm not going to break it down to the exact point percentage, right? So if you bought at 60K and we're saying that the high side is 90,000, give or take a few grand, 5 grand, 10 grand, whatever, nobody's going to be able to tell you the exact top. That's a 50% return, but now you're risking, based on Bitcoin's bear markets, an 80% downside. So the risk to reward here isn't really worth it. So if you were a buyer at 60K, why would you not be a buyer at $30,000, $40,000 if you were under the impression that Bitcoin's going to go to 90,000, or if you watch some of these Moon Boy channels, 200K by December. So now you're looking at it, BTC at 30 to 40 grand. You have a risk, in my opinion, based on the market history, we would bottom somewhere between 12 to 20K. So what I'm saying is you run a risk that we are entering a bear market, even when you're buying at 30, 40K, and we have a downside risk of 80% from the all-time high. Now, if you bought at 30, 40,000 and we did go to 12 or 20K, just averaged out, just for simplicity, a 50% drop, but your reward here would be between 150 to 200% gains. So you see the difference in the risk to reward that you're getting here. It's exponentially higher. Also, just looking from a risk perspective, you've brought down your risk from 80% to 50%. Remember, we're just going on market history. Now, obviously, yes, Bitcoin could have a black swan event and it could go down 99%. Right? But we're basing this on the technicals, and from a technical perspective, Bitcoin has never really seen more than 80%, give or take a couple of percent downside in a bear market. If you were to wait for the 12 to 20K, risk is even lower, and you would be looking at about a 20 to 30% if you are dollar cost averaging, with a potential reward of 350 to 600%. This is the way you should be looking at the market. Anything else is possible. No one is going to be able to tell you if the market is going to go up or down in the short term for sure, 100%. If they're telling you that, they're lying to you. Can we go with the general thesis of the market's bullish right now, we're headed up? Yes, you can. Now, this is where conviction comes into this space. Are you a short-term or a long-term thinker? And you may be a long-term thinker, but you may not have the conviction required to hold crypto assets because you just don't know enough about them. And that's okay. So maybe you sit on your hands and wait. That's okay too. But again, do you want to come into a market and buy the highs again? And that's really what it's going to boil down to. Do you want to keep being that person that keeps buying high, and then getting scared and selling lower than what you purchased it at, or break even? Or maybe you stayed in the market a few months and you only went up like 10 or 20%. So you're taking on all this added risk when really maybe you should have just bought gold and just held that, right? If you want 10, 20% reward, there's much lower risk investments that can be made. All indicators are split 50-50, bullish to bearish. All the indicators that I use, at least. All the on-chain metrics, however, are not pointing towards a market top. Based on this, we still haven't technically seen a break of weekly market structure. Came down below these candles, but we haven't even closed a candle below the lowest point that we had in weekly market structure. So this point right here, in my opinion, would be right around this level. So if we were to see a weekly candle close, like the body of the candle close below 32, yeah, it's not fantastic. And I'm going to be honest with you. And yeah, we could come down to 20,000, 12,000. And based on market history, the 200-week moving average has always proven to be the bottom or close to a bottom. We do, see dips down below it, but this is the area of least risk and highest reward. That's only if we're going into a bear market. Now, this 200-week moving average is at 16,000, and each week it is moving up by, I believe, just under $1,000 or so. I'll leave it up to you guys. I just want to give my 2 cents. If you have not built a position in Bitcoin yet, dollar cost averaging, best approach. If you're new to crypto, new to investing, and even if you're not, having 20 to 30 to 40 to 50% cash here isn't necessarily a bad thing. And then you can average into the plays that you like upon a confirmation of a weekly uptrend. With that being said, guys, hope you enjoyed the content, and we'll see you on the next video. Cheers.